Hey everybody, how is it going? Welcome back to the channel. In this video, I want to share with you some of the warning signs that I am seeing in the market, and it might help better prepare us for what's about to happen. And then after that, I actually do have some nice looking charts that I want to show you. Now, if you're new to my channel, I have been trading and investing for over 20 years, and in each video I will show you trades that I see setting up right now. So if that's something that interests you, please consider subscribing so you don't miss any future trading and investing ideas. And also, if you would like to support the channel and become part of our Patreon community and see what we are buying and selling in real time for a measly $10 a month, that link is in the description. All right, well, first off, I want to start with this article right here, and this was put out by the Sentiment Trader, and they have a free newsletter. If you guys aren't signed up for the newsletter, I would recommend it. I'm not affiliated with these guys at all, but they put out a lot of great data on the market, a lot of interesting articles, and, you know, it's all free, or at least their free newsletter is. I do think that they have a couple of paid services. But, man, they put out some really interesting stuff. And this article says that this is the biggest cluster of NASDAQ warning signs in 6 years. And it says, despite new highs in many of the major U.S. equity indexes, the old school NYSE advanced decline line hasn't made a fresh new high for over 2 months. And it says it is worse on the NASDAQ, and it definitely is. I've been looking at the advanced decline line for some time, and it's really starting to erode on the NASDAQ. But it says on Monday, the NASDAQ composite closed within 1% of a 52-week high, and yet 2 long-term measures of the breadth on that exchange fell to very low levels. The McClellan Summation Index closed below 350, and the new high, new low ratio was below 30%, and that is extremely low. And it says that those are the worst figures in history dating back to 1986 for a day when the composite was so near a high. And it also says that this has been triggering some technical warning signs such as the Hindenburg omen and the Titanic syndrome for the NASDAQ. They make that sound really bad. But if you're not familiar with those, the Hindenburg omen is a sell signal that occurs when the NYSE new highs and new lows each exceed 2.8% of advances plus declines on the same day. And the Titanic syndrome is a sell signal triggered when the NYSE 52-week lows outnumber 52-week highs within 7 days of an all-time high. So that one is a little bit easier to read and understand. And it tells you there is a massive divergence going on in the market. And, you know, that usually happens when you're near a relative top or a new all-time or just an all-time top. So just a pretty scary signal. And this says that the it's a bevy of technical warning signs, and it's showing the combined Hindenburg omen and Titanic syndrome going all the way back to 1986. And you can see this level is higher than it's been all the way back since 2015. And when the reading gets really high, like it was in 2008, in 1990, and in 2000, you have some pretty big market corrections. Let me see if I can zoom in just a little bit on this one. But you can see, even in 1996, when they said there wasn't much of a rollover, there actually was a pretty decent rollover. And in 1999, that was right before the NASDAQ went parabolic, so there was no rollover there. But in 2015, they said it wasn't too bad, but you can see there was a pretty decent rollover not too long after it happened. So when this happens, when these two warning signs happen at the same time, it's one of those indicators that you know, it's pretty predictive. And these type of signals that don't happen very often, I think it happened 13 times in the last 30 years. So this only goes off about once every, you know, 3.25 years, 3.5 years or so. Those are the signals that tend to be the most accurate. The ones that don't happen very often, if you're into like technical signals and stuff like that in the market, the ones that don't happen very often usually have the least amount of false signals. And like I said before, guys, Let me zoom this thing back out. I think we can all feel it in the market that, I don't know, I can feel it anyway, that I think we're going to have a rollover before too long. Now, this article goes on to say that when there has been such a cluster of signals within the composite within spitting distance of a new high, trouble was brewing most of the time. The NASDAQ escaped any damage in 1996, but I don't think that is very accurate, because, I mean, if you look at, these signals in 1996, I think there was a rather decent rollover afterwards. It wasn't massive, it wasn't a big market top, but I think if you were lightening up on stocks when you saw that signal, you had a chance to buy in at a better price, at least, for a short period of time, not long after. And of course, it says in 1999 for a while. I mean, because in 1999, the thing went parabolic, made some more signals, and then, of course, we had the big tech wreck in the year 2001. And it says also in 2016, that was also a false signal. But if you look in 2016 right here, there was a rollover not long after that as well. So I think these two combined warning signals are rather predictive. And the article also goes on to say that after the speculative blow-off in late January, early February of this year, we've been on the lookout for major deterioration under the surface of the indexes, and there have been periodic bouts of that since then, and the indexes have almost immediately recovered. So we got a lot of liquidity coming into the market courtesy of the Fed, and I think that's one of the reasons, actually that's probably the main reason, a lot of these sell-offs have been bought up so quickly. But this article says we will have to see if this is yet another episode. And man, like I said before, I don't know about you guys, but I am seeing a lot of deterioration in the market. I think unless you are in some of those cap-weighted indexes and in some of those big tech stocks that have continued to move higher, you're probably suffering some losses. But I think, certainly judging by this article and all the other warning signs that I've seen in the market, I think it could be getting a little worse. But let's get into the charts real quick and see how they're looking. All right, the first chart I want to show you is the daily chart of the NYSE Composite Index, and this one has been consolidating for about 3 or 4 months. But it was breaking out just a few days ago, but immediately selling came into the market and sent it right back into that consolidation range. Had a nice breakout above 16,750 or so, but then now it is below that. So that is not a good sign once they see a breakout and they immediately sell into it. So I would expect the NYSE to probably have to grind around here in this consolidation a little bit longer before it breaks out again. We will see. But if we go to the weekly chart on the NYSE, we can see that the MACD has already rolled over on the weekly. Even though the NYSE is making a new high, it has rolled over on the weekly. I wouldn't necessarily call this a massive divergence signal on the NYSE because I usually like to see a bigger V pattern on both, and that's just not happening. But either way, it's still a negative signal. So the signals are really starting to pile up. And if we go to the NASDAQ Composite, you can see we have a much clearer divergence signal on the MACD. And this is a weekly signal, so these are usually quite predictive. This is one of the ones that make me the most worried in the market right now, is this negative MACD divergence on the composite. And if we go to the Dow 30, we can see the Dow 30 is making somewhat of a similar pattern. We got a little bit of a divergence. It's not as nasty looking as the NASDAQ, but it is definitely a divergence on the MACD indicator. The MACD is negative and continuing to move lower. So I just think that there is a lot of negative signs coming into the market. And actually, let's go over to the Russell real quick. The Russell is the one that I'm keeping the closest eye on. And I'm really hopeful that it's going to be able to break through this consolidation to the upside. I think if the Russell can break through this consolidation at about 234 or so, I think the market is going to be off to the races again. But it looks like it has a date with the lower boundary, and it looks like it's most likely that it's probably going to end up breaking through the bottom. And that's probably going to be a sharp sell-off in the IWM. But man, these things are just really starting to pile up. The MACD is really starting to roll over and continue lower, but I mean that's kind of common in a a consolidation after a big run up. That's not necessarily a huge warning sign when the MACD is headed down in a consolidation after a large run up. So this is not all that concerning to me. A breakdown below this consolidation would be very concerning to me. Hopefully this thing can continue to consolidate and then eventually break out to the upside, because I think that's going to lead to a lot more upside in the market. All right, enough of that negative talk. Let's get into some positive swing tradable charts right now. But but seriously, guys, it would not be the worst thing in the world to be raising a little bit of cash right now. And, kind of picking and choosing your spots and wait for that IWM to get above that consolidation. I think when that happens, it's going to be a lot safer to put some money to work in the market. At least that's what I am planning on doing. Oh, but by the way, please like the smash button and help me out with the YouTube algorithm and all that stuff. But please remember, I am not a financial advisor. All this is just my opinion. Please make your own trading decisions. All right, let's get into this daily chart of the Tattooed Chef. After this big gap down it had after earnings, I was kind of patiently waiting. I wanted to add to my position. I have no interest in selling just yet, but I wanted to add to my position, and I wanted to be patient and wait till I got into this support area. I've had this support area on my chart for many months now, and I ended up adding a little bit, just under $16 a share. So it looks like could be a short-term reversal, because that is a bullish candle right now. It's selling off just a little bit, but hopefully we get a bounce right here, and we end up, hopefully it is the all-time low, and this thing just continues moving up from here. But if it doesn't, I'll just be adding more shares. But I did want to be patient and wait for this support area. And as long as you have a stock that you want and it's coming down and you see a well-defined support area, there's really no rush. Wait for it to get into that area, because more often than not it will, And that's a little bit safer, because you usually end up getting a decent bounce, at least a temporary bounce, off a pretty solid support area. So add a little bit to a Tattooed Chef. Let's get into CleanSpark. CleanSpark, apparently I should have bought more yesterday. I didn't think it was going to be reversing so quickly. I thought for sure we were going to get a date with single digits, but it's not looking like it's going to happen as of yet. The company is getting a little bit short on cash, so I wouldn't be a bit surprised if a share offering is coming just around the corner, and that might be what it takes to send this thing down to single digits. Who knows? If that does happen, I'm going to add some more CleanSpark, because I'm not too worried about it. I think I still think that this stock is going to be a great long-term hold. Let's get into some other nice looking charts that I think were tradable that I do not own. This one I found today, and I think Gilead Sciences is looking really good. And after examining the NASDAQ components, it seems like the biotech stocks have been very strong the last couple of weeks or so. And Gilead Sciences is making a nice breakout out of this triangle consolidation. I think this stock is going to be very viable if it pulls back a little bit more. And of course, if it fails down through this consolidation, that will be your signal to get out, but that's not a ton of risk. I mean, if this thing pulls back to 71, I mean, you're gonna be out of the stock probably 69 or maybe just a little bit below 69. So that's not a whole lot to risk on a percentage basis. Another one that I was looking at, and these ones I considered buying, but I'm really trying to pick and choose my spots. I think Alcoa made a nice breakout, had a reversal, pulling back to that support area. I was strongly considering buying this one today. I did not, because like I said, I'm trying to really pick and choose my spots. But man, I think this is a very viable chart. Nice rounded bottom and pulling back lightly into that support area. So if this thing can hold this support area and jump above this recent high, I think that will be another great signal that is probably going to continue higher, and that should be a decent buy signal as well if you wanted to wait for a little bit more of a safer signal. Another one that I strongly considered buying that I did not buy was Wells Fargo. I think the banks are pretty strong. It's pulling back to that support area, so I'll have another chance tomorrow if I want to get in. But man, just a nice light pullback. You can see the volume is well below average, pulling right back into that support area after a nice clean breakout of a rounded bottom. So a beautiful pattern in Wells Fargo. And, there's a lot of people that think interest rates will be going higher before too long, so that should benefit the banks. And this one is making one of the nicer patterns in the banking sector. All right, the next ones I want to talk about are way more risky, but I think that they are bottoming right now. And the first one is Douyu. I think these, of course, these are Chinese stocks, so I don't know if you want to be buying these for the long term. I think they might be decent-looking swing trades. If we zoom in a little closer here, you can see we had a nice bullish engulfing candle yesterday after a long, grueling downtrend. So this is the kind of reversal signal you want to see, and you want to see if it holds. We're making a doji right near the highs of yesterday, so that is a very good sign. Lower than average volume, that is another good sign, and not a whole bunch of volume came in to sell off. So if we get a break, let's go to the 15-minute chart. So if we get a break above this level here, about 350 or so, I think this chart is going to be very buyable, and this stock is way overdue for a bounce. You know, if there's some good news that comes out of China, I think a lot of these Chinese stocks are going to start screaming higher. Of course, I am not touching these until they have a technical breakout, but I think Douyu could easily bounce up 20, 30, 40% from here, because that would not be that much of a retracement of this big sell-off. Next one I want to show you is Huya. Let's go back to the daily chart before I get into this 15-minute chart. We can see that Huya has been in a huge, long, grueling downtrend as well. Just from the beginning of July, this thing is down 50%. So I think this thing could easily, if it gets going, get some good news out of China, could easily end up bouncing right back up to this 50-period simple moving average right around $14 or so. And it looks like it's making a pretty decent bottoming formation. Not as nice as the other one, but if we go back to that 15-minute chart, you can see the pattern is rather similar. So I think if we get some good news out of China, even if it's only, you know, moderately good, I think some of these Chinese stocks could really get moving, because these things are way oversold. But I would not be sitting in them too long. I would just be playing them on a swing. So definitely keep an eye on these Chinese stocks. Okay, everyone, that is all I have for this video, so I'm going to end it right there. But if you have any questions or comments on any of these stocks, or if you have any other ones you want me to take a look at, please leave it down there in the comments section. I will get to them as soon as I can. If you enjoyed the video, please hit the like button and subscribe to the channel if you haven't already. Thank you so much for watching my video all the way to the end, and until next time, take care, everybody.